It looks like a fire sale in the world of cryptocurrencies, with Bitcoin breaking the $30,000 mark and ETH hovering around the 2,000 level. But El Salvador, the world's first country to make Bitcoin legal tender, has used the dip to add crypto to its coffers. But is making Bitcoin legal tender actually furthering its adoption in the new economy? Let's find out from Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform. It's great to see you again, Mark.
Great to be here.
Mark, the countries that have adopted Bitcoin as legal tender have got a lot of criticism, including from the IMF, which has said it could further financial instability. Central African Republic, one of the poorest nations in the world, has become the most recent one to bank on Bitcoin. But does a move like this translate into crypto adoption? A report recently showed only 20% of El Salvadorians continue to use their crypto wallet after spending the initial free bonus that was offered by the government.
It's an issue with using something like Bitcoin BTC as a payment in these Latin American and African countries is the fees. The fees on chain are often several dollars, often $5, $10 to spend Bitcoin. If you're making a small amount of money, if you're making $2 a day, a $1 fee is like a few hours, 5 hours of your time. It's a lot of money. It's a high fee. And so these fees end up pushing people to relatively centralized payment providers. And the issue with that is you can't tap into the peer-to-peer liquidity. It makes it more difficult to convert to cash. It just limits your options. The point of a blockchain is to be able to be decentralized and be able to have people transacting peer-to-peer on it as cash. And so I think this is where, cheaper blockchains like Bitcoin Cash and other things like that would be a more suitable mechanism of payment for some of these poor, impoverished countries. I think there are a lot of reasons to move away from local currency. There was a recent study that came out that said that majority of the world is living in double-digit inflation right now. What you'll see is a move towards crypto. But I think it's going to be two things. I think it's going to be things like Bitcoin Cash and other currencies that have very cheap transactional mechanisms. And I think it'll also be stablecoins, because stablecoins track to the value of the dollar. In the case of FlexUSD, you're also earning interest. And so things like that are probably more likely to get adoption than Bitcoin BTC, because the ability to transact first class on the network is very important.
We are also seeing a lot of innovative use cases emerge in Latin America. One report says that 1 in 5 Argentines have used crypto. What's the driving factor here?
A lot of these countries don't have a very strong local currency, don't have a very strong central bank. It comes down to inflation. If you're an Argentine and you've seen over the last 100 years, I don't know how many times, but it's been many, many times, probably more than almost any country in the world, the entire currency has just been completely wiped out to inflation. You don't trust local currency. You probably don't even trust the dollar. But at the end of the day, they value, things that are safe havens. But if you're not rich, gold is hard to get in a way where you can easily store it and you can easily do certain things with it. Bitcoin, crypto. This is the way forward. This is where you can actually, get a meaningful amount as a small individual and an everyday person, and you can protect yourself. And so I think it's only natural that anywhere that's dealing with double-digit inflation, which again is the majority of the world.
Interestingly, the governments in these countries seem to be pro-crypto, unlike the conservative wait-and-watch stance we've seen in the United States or the European Union or even India. In fact, Buenos Aires is happy to accept crypto for making tax payments. What explains that dichotomy in the different approaches at state level?
If you think about a country like El Salvador, St. Kitts, Central African Republic, many of these the citizens in Argentina, many of these countries don't actually have a lot of ties to the U.S. banking system, or don't have very privileged access in the U.S. banking system and the U.S. dollar financial system. And really, they're ultimately, their citizens are looking for an escape. And so a government, can only not listen to its citizens for so long. It at the end of the day is at the behest of its citizens. And so if all the citizens are saying, look, we want crypto, we want to escape from inflation, we want all these things, at some point the government has to listen. And I think also in some cases, the governments are getting some publicity and maybe people moving there and other things from the crypto space. So crypto is becoming a large economy, and it's not the biggest by far, but it's a multi-trillion-dollar market cap. There's a huge amount of economic activity in the space. That as that grows, it becomes more of an incentive for more governments to be friendly to it.
It may not be big right now, but digital currencies are certainly a giant in the making. Thank you as always, Mark.
Thank you for having me.